Hello, Warriors. Who's afraid of central bankers? Mike Delfino, how are you? Ryan, hi.
Hey, Dale.
How are you? Sinatra,
Good,
Michael
mate.
Bergman, Jays, Brand, Michael Weissman, the whole crew of gamblers are here. How you doing? So, Ryan and Kman's back, which is great. Welcome back, Kman.
Thank you, Dale. Good morning, everybody.
Good to have you. We miss you.
Thank you.
So I'm going to start off with you. You know, we had some pretty wild action on this candle in the yen, and it's giving some of it back. Are your feet in the stirrups again? Ready to ride? What are your thoughts going into the BOJ this week?
Well, I'm not yet completely back, but I do notice there where it stopped around 142 there.
Yeah,
And that's a very good intermediate level, I'd say.
61.8.
Yeah, the 61.8, and I also have a bit of a trend line coming in there. So that's a decent enough level to watch for going into this central bank and big data week as well. There's a lot of data out as well this week, and on Thursday, just before the BOJ, we are going to have the second quarter GDP as well out in the States. So there's going to be some very interesting developments, I think, in the yen. Base case is that they still won't change anything, but they might start to change expectations on inflation. We've had a rundown through the data, the latest data in Japan, and they are not doing too badly. So the window is wide open to at least review some stuff. But whether they are going to do anything is the big question, because Ueda seems to be even more dovish than Kuroda at times. So
Okay.
yeah, it's going to be a very interesting week for the yen. Well, on the downside, it's a while away from where we are, but those low 137s, high 136s up to 138 is big zone as well. So the scene is set really, and now we first after the week PMIs, we are going to see what the dollar is made of on the PMIs coming up in a little bit.
Okay, well, you know, I was expecting the dollar to rally to par and a half and then come off. And the fact that it had a little different form makes me constructive. I wouldn't chase it. Over 102, I think seals, you know, a low for higher levels. But I'm leaning towards buying dollar weakness maybe after the ECB, if they try and rally the euro. And
Yeah.
I'm not sure if this is just, you know, one day in euro pound, but I'm going to give it the benefit of the doubt that it's just flagging up here. So my preferred short in this week is I'm going to attempt shorts and cable up around 130 if we get there. Thinking that this was the beginning of a bigger correction, and I'd be wrong over the high. So that's what I'm looking for in currencies, and the Dixie may be around, you know, back near par, you know, some type of pullback here if that happens from central bank, you know, statements.
Yeah. The funny thing is that even though we are always, and we will be, and the market as well, looking for hints at finding the top in yields on or what the expectations are for the ECB going forward into September. And funny enough, the options market is only pricing a very limited range into the ECB plus FOMC, which is a bit strange in my opinion, because also being in a more holiday market, I would expect the ranges to be bigger. But over the FOMC and ECB combined, the options market is only pricing in like 60 pips or so, which is very little. So the expectations are a little low for the combined move ECB
Interesting.
FOMC. So perhaps the big mover will be that Q2 GDP on Thursday.
Okay. You know, the NASDAQ had one of its worst days in quite a while on Friday. And you know, here's the 4 hour right at support. You know, action was, you know, pretty lousy in some of the leaders like NVIDIA. Looks like it peaked pretty nice little 3 drive. Everything's coming in higher today. AMD's been under pressure. Microsoft has earnings this week. It put in a pretty nice high here. You look at the daily, even on that spike. So they can get spikes out of all these names if they just mention AI. You know, that's kind of what happened at the high in Apple up here too. So I think there's a chance of risk off, which is another reason why I favor buying weakness in the dollar. So I think this is part of it. Probably means nothing. I've seen them do this before, but you have, even with the S&P's 8 handles higher, you have a little gap in the VIX. They've done it several times. You know, sometimes I think they just gap it up so they could, you know, sell vol. But keep an eye on the VIX. If it starts getting back through, you know, 15, 16, it's going to look okay. So just something else I've noticed. I'm completely lost on yields. I keep vacillating between, you know, it's underneath the breakout, it's back above the breakout. Looks like it wants to work lower towards, you know, at least here. I'm not in the camp that we're going to get, you know, the 10-year yield to do something like this. You know, you have people talking zero interest rates again, and you know, 2% 10-year yield. I don't think so. And then the other feature is a lot of people are going to get pretty bowled up about oil here. And even though, you know, and even though it's cracking this, you know, there's still resistance above it, but people are calling this a pretty good breakout. So that flies in the face of all the great 12 in a row, great inflation numbers. You have any thoughts on risk here? How about Ryan?
No, not really.
Nothing on risk.
I think yeah, it's question about yields and how the numbers are going to go to hold up going forward. It's a kind of situation that if economic data, but it's still a big if, are really starting to crap the bed, like we saw the European CPI PMIs this morning, then there may be there's a chance that stuff may be topping out a bit, but if the economy continues to even muddle on, but without really dumping too much, then it's going to be a case of liquidity, I think, for the stock market.
Okay. Copper looks like it's coming up to, you know, an important level. Still, you know, about a nickel away, but 375. It needs to hold, or we're going to have a continuation move to the downside. Is Stel here? Oh, it was Stel
I'm
on that
here.
island.
Hello.
Were you on that island? Were you on that island? Were you on the roads?
No. I was in Paris. I was in the middle of the Aegean, but it's a tragedy what's been happening. So many, yeah, a few places burning at the moment in Greece, unfortunately. But what can you do?
I know you used to go there, and Blake told a story of how he was stuck on the beach at Rhodes once, right, Blake?
That was Steve, not me.
Yeah, no, well, no. You're confusing. I was stuck in Hawaii because of a fire. But that's all right. You know, it is a shame what's happening in Greece, by the way. So
yeah.
But actually, it was, you know, what it was though, Dale. You might remember it from a few years ago, and Steve might be here. Steve's father-in-law. During the fires, 4 or 5 years ago, maybe the fire came right up to his house and his house is on the beach, so on the water. So anyway,
yeah. So what do you think? You know, silver was rejected up here. Stel, are you back in, you know, the groove of looking at the markets again?
Yeah. I've been looking at the markets while I was away, obviously not as much as usual, but we're still in the middle. We're still at pivotal levels in yields and in the dollar. Yields 382 was the break. We've been hovering around 380 to 385 for the last few days. Huge decision to be made. FOMC will be, I think, the day. So there are two scenarios. If yields go lower, which means that the FOMC maybe hikes 25 and is dovish, or God forbid they don't hike at all, I don't think they're going to do that. Then yields go lower, and that means we've had the false breakout, which is bearish. I'm still in the camp that we will see 330 first before we go anywhere else. But that remains to be seen. Obviously, the Fed is the big driver, and it's a similar story in the Dixie, because we've been talking about for a while that 100.80 level, which was taken out to the downside. Now we're above it. We are still, I think, close enough to not be calling this a false breakdown. Same with yields. It's not a false breakout yet. So I'm personally waiting to see what happens with the Fed. As I said before, my base case scenario is that they will have to hike this time. But I think they're done after that. The market's pricing a little bit more of hikes. I think the continuing weak data, yes, there are a few exceptions, but overall the data is weak. And overall inflation is coming down everywhere, even in the UK, which has been very, very sticky. It disappointed last week. And really the inflation story, I think, is that of we're going back towards target, which by no means is that good. No, we have to see, as I said on the Flow Show this morning, we have to see a few quarters of negative inflation to really be saying that, okay, maybe we're going back to normality. Otherwise, we just baked in high prices and that's it. So I'm not doing anything now. Silver, I'm still long a full position from 2309. And 9 or 10, I can't remember exactly. And I like that. The levels are very, very clear for me. So we have the highs at 26. Really, that's the main level. We do have a descending trend line which passes around 25-ish, but I think that's going to be a minor level. 26 is the big one. And as we said with Kay this morning, I'm going to be unloading a little bit of my position as we head towards 26. That's my base scenario, that we will head higher, because I think the Fed is going to be a little bit more dovish than expected. The dollar will fall, yields will fall, hence metals go higher. So that's my plan. On the downside, again, clear levels, 22, 22.20. I'm kicking myself for not getting long more, which I had been saying for weeks at around in the low 22s. The force of this sell-off kind of scared me, and then I missed it. So hey, it happens to everybody. But yeah, at the moment it's a sit and wait game, and really we have to wait for the Fed. Nothing else to do, and that's why I think we're at these we stay at these pivotal levels in the major instruments, in yields and the dollar, and everything else follows. And stocks and risk, I'm going to repeat once more. I've said this for weeks now. There is no technical evidence to tell us that we are near high. You try to short this market, you can make money doing that, but you have to be very good with your timing and very short with your time frame, because look at the last couple of months. It's just going up in a straight line. So
okay.
Hey guys, I want to ask a question. First of all, welcome back, Kman. It's nice to have you back. It's nice to hear your voice here once again, and I'm sure the Flow Show really enjoyed having you back as well. But I wanted to ask.
Wait! No, welcome back from me. Thank you.
Okay. No, I've talked to you. I talk to you all the time.
I know. Carry on. Sorry.
But and welcome back, Stelios. I wanted to see what you guys thought about the Eurozone. Well, not just the Eurozone, all the PMIs that came out this morning. I mean, the German PMIs. You guys got to go look at a chart. I'll show you a chart in a little bit. On the German, manufacturing PMIs, we're at levels we haven't seen since the COVID lockdown, but really horrendous levels or numbers, across the board. UK PMIs as well. I know we're going to get our PMIs this morning, but what is that? How we haven't heard much from Ryan. Ryan, what are your thoughts on like the ECB? and how they're going to take this this data, especially with the interest rate decision this week, where everybody's expecting a fairly hawkish ECB.
Well, obviously the data sucks. That's first and foremost. Seems like the US is out in front in terms of the soft or crash landing stakes. But the ECB will look at the inflation measures, and last month it saw CPI coming down, but the core going up. That's what it's going to be concerned about. I think the market has probably got a little bit too dovish over possibility of a set hike. That's something that I'm going to look to try and exploit if the price goes my way over this week. But yeah, the market's going to go with the data. It sees rubbish data and it's sold off the euro. Bit of dollar, the dollar side of things, meaning the Fed's going to be maybe a bit touch more hawkish. So yeah, roll with the punches. We could get a strong or hawkish sounding, bullish sounding Fed, and the dollar strengthens, euro dollar falls, and then the ECB could be as equally hawkish, and it does a complete 180. That's why I was saying on the flow show, it's a bit difficult to trade levels during these sort of weeks, because all these events can just flip the price around, as it sees fit.
Isn't it going to be hard for the ECB to be too hawkish with these growth numbers look so horrendous?
No, because they want to keep the message going. Same with the Fed. It's not about whether they peak or not. It's about keeping the message going that they're not going to cut and they're not going to ease up on rates. That's the message. That we all know that it's a 99% certainty where 1 or 2 hikes from the Fed from being done, with 1 or 2 hikes from the ECB being done, with 1 or 2 hikes from the BOE being done. So we know that the top is coming for rates. Now the next passage is all those central banks not letting the markets get too dovish about when rate cuts will come. We're already pricing rate cuts in 2024 for the Fed, not quite for the ECB, and they won't want to let that side of things pick up again.
Yeah. And they can't get their banking crisis to continue without continuing to tighten. And I'm not a real, and I'm not really a big conspiracy guy, but it is possible they need a justification for the CBDC, and no one talks about it. So I mean, why are they going to be able to justify having a central bank digital currency? Is people losing confidence and faith in the banks, and that may do it. That would put enough fear in the public to try something new. And there's already fear in the public because people are still withdrawing funds. So anyway, take it for what you want. I think that's I don't know how they're going to introduce it without having fear, people fearing what they've had their whole life and used to it without questioning its security, and that's the banks, and it's starting to happen. So I don't think it's over with SVB.
Yep.
So
all right. Well,
you think am I crazy to even think about that?
No.
Go ahead. You answer that, Stelios.
No, I was going to say no. There's obviously some scenario where what Dale is saying is true. Obviously we don't know for sure, but anything is possible. One thing I wanted to say about central banks and hiking and cutting and all that, we have to ask ourselves one question. The central banks are now seeing inflation dropping. Yes, okay, some countries is not dropping as fast, but it is dropping. We're seeing PMIs crashing. We're seeing all these leading indicators really not doing well. We are seeing PPI going negative year on year. All this should theoretically tell central banks that, look, you can keep hiking now 1, 2, 3 more times, but it's not necessarily that this is needed anymore, because the trend is there now. So even if central banks do nothing now, all these and this drop in economic activity will bring inflation down, will bring everything down. So theoretically, central banks should be able to say, okay, we've done enough. We've gone very fast, very quickly. Let's see how things develop from here, because the signs are starting to look good. And also US CPI 3%. I mean, it's not that far off their target. So they should be able to maybe say, okay, we're going to be a little bit cautious. If needed, we start again, So
they could have done that at the last meeting.
They could have done that. Yes, they could have done that.
Yeah.
But we have got worse numbers since the last meeting. So,
yeah. So if they do it now, what's your point? They don't have to do it, but they do it anyway. Why?
Yeah.
Why?
No, it's not. They don't have to do what? Sorry, they don't have to hike.
They don't have to hike. Keep hiking.
Because they're going to shock the market, aren't they? If they don't hike, that's the thing. The market's pricing fully, pretty much, this hike. So,
wait, when's the last time the Fed did something that the market wasn't expecting?
A long time, Blake.
It's been a while. This isn't Alan
Greenspan's briefcase.
Yeah, this isn't the briefcase Fed, that's for sure. Hey, Ryan came in. So I'm trying, and I messed up I think I messed up the name over the weekend on my week ahead video. The Politburo, is that the meeting that China had? They talked a little bit about stimulus this week, and I think that some of those headlines came out overnight. Am I mistaken on that?
Not sure about the Politburo stuff. There was a piece from the China Securities Journal just saying the same old stuff. They could do further rate cuts, an RRR cut, that sort of stuff. But it's pretty much daily we get stimulus measures headlines out of China now. But it all seems to be targeted stuff. They're still going to aim at property. They're going to aim at consumer. They're going to aim at this. They're going to aim at that. It's not, they're not doing QE type stimulus. It's all, trying to get little bits and pieces working.
Yeah, and I thought that's what jacked up the copper this morning, was in Asian trade or in European trade when they made those announcements, and copper spiked up, and that was what created that move. But Dale, you had the same trend line we were looking at in the chat room actually as well. Copper is going to be a pretty important support. And what you'll notice is the Aussie just gave back all of its gains too. I think the Aussie rallied right after, all those headlines too. And, we rallied off the 618 retracement, and boy, I'll tell you, the Aussie's trading heavy, really heavy right now. It's, and we start breaking below 67 cents. And, I don't know, this double top, it might actually play out pretty well. So, just a few things. I noticed that City Tech, they referenced the double top this morning or last night in Asia as well. So just little heads up. So what's on you guys' radar? Dale, this week it's a big week. What's the big event for you this week? Like for me, it's going to be the BOJ. I think the BOJ is going to be the market mover. I think, as I explained on the week ahead video, I think the dollar yen is going to be trading either at 137 or 145, by the end of the week. That's going to be, my mover. What do you think, Dale? What's your big event this week?
Well, like I was saying earlier, the fact that the dollar index did what it did instead of coming off at the breakdown, to me, looks like a false breakdown. Doesn't mean it can't trade back underneath it, but to me, it looks, I'd be buying dollar weakness, selling euro strength, cable strength.
I don't know if Ben Maldonado is listening in today, but
he'll be here tomorrow.
Oh, he'll be here tomorrow. I actually mentioned him on the week ahead video. I'm like, he saw the ABCD, the equal A move here.
Yeah,
I wasn't
you
even
mentioned
looking
it
at
with Jim Welsh too. I watched your interview with Jim, and you said you called him a gentleman. So
yeah,
gentleman.
He's a gentleman. But I was looking at this ABCD. I wasn't looking at this one, which is here. No, it's just a little bit extended one. But it's like there's two equal leg moves. I mean, they're both there. It's I just wasn't even paying attention to the little bit longer term one. So that's great. Ben's going to be here tomorrow.
Yeah, I think and I do think, Blake, even though we're up in the S&Ps and NASDAQ today, that what happened last week was important. But then again, you have Microsoft earnings. You have a lot of earnings this week, big ones. But at least 5% correction I mean, okay, so maybe it's not, you know, a huge move, but I think we're, at least going to come back and test maybe the breakout or even underneath it. So,
so
I wouldn't be long up here. I wouldn't be long up here.
Okay, you wouldn't be long risk. Okay, well, Kman,
I'm long VIX.
Welcome back. What's going to be the big event for you this week?
Yeah, if you're talking yen terms, I think the combination of the US Q2 GDP and the Bank of Japan is probably that US GDP could be the kicker, right? If Bank of Japan goes one way or the other, and the US GDP confirms, let's put it that way, perhaps more so than the central banks. And then the other ones, and if you look at, and I've been showing a couple of charts also on the Flow Show, but I've put the Euromex, for instance, in the chat room just a few minutes ago. There's something in the emerging markets that's keeping those emerging markets pretty well bid, despite inflation coming down. If you look at the dollar rand, we tried above 18 again this morning, rejected. If you look at the dollar mix, can't hold that 17. And then especially if you look at the euro mix, we've tried a couple of times to get close to 19, but the longer term downtrend it comes in at around 19.10, and that is not even tested. So if the numbers come out, or either weak euro continue to come out, weak euro or whatever, and the emerging markets continue to do well, there may be some moves there in those crosses as well. So there's those couple of things are on my radar, and euro yen at 158, triple top right now.
Yeah. All right. Well, and good. Yes, the emerging market currencies have been very, very strong. Matter of fact, the Mexican inflation data, the month-over-month data, came in a little hotter about 30 minutes ago. So one of the other things keeping Mexico firmly in the buying camp, but I guess the flip side of that is stocks continue to grind higher. I mean, if you look at the stock market, I mean, we're literally right at highs of the year. So
if one gets a really big setback in the stock market, emerging market will likely not like it either.
Yeah.
But and there was something, if you allow me, there was something that I read over the weekend saying that inflows in emerging markets are still very high, barring Chinese yuan. Okay, so there seems to be some rebalancing also going on over the past weeks or so between the Chinese yuan and the rest of the emerging markets. So that may help the other emergings as well.
Got it. So Ryan, or Stelios, what's your big event of the week? What are you thinking?
I think the big event is the Fed, not the BOJ or the ECB. The
Really?
Fed, baby. Yeah.
You think the Fed? Why the Fed? And because everybody, we kind of know exactly what we're going to get from the Fed, right?
Rate wise, pretty much, yeah. But what kind of guidance do we get? I think it's a Fed because, as I said before, 10-year US yield and the dollar are at a very, very critical level. So, and let's face it, the dollar and yields, US yields drive everything.
Yeah.
So, for me, it's the Fed. Of course, the BOJ is important, the ECB, but not as important as the Fed.
Yeah, this is going to be really, really critical if the bond market can break that 113 level. It's a 618 retracement. It's been major resistance this last week. I don't know if Steve is here, but we'll love to hear. Steve. Oh, hey, Steve, how are you?
Good, mate. How have you been?
Good. I could have sworn you were traveling today and heading out of town. So good to have you here. Real quick, I know Dale has an interview.
You know where I'm going, right? You remember?
I remember. Do I remember where you're going?
You should.
No, it's where you were at last year.
Exactly. Which is
Rhodes.
Yes.
Oh, okay. There you go. So see, I remember.
Are you going there? By fire engine.
You still going there, Steve?
Of course I am.
Okay.
So Steve,
I thought they were evacuating people there.
Yeah, but he runs into the fire.
It's a clever trick to go somewhere where there's not enough people and it's really nice and quiet.
That's right. You know, I remember going to Mexico when they had.
Do you think that the fires were put there accidentally?
No, I heard it was arson.
Of course it was, mate. It most of the times is, actually, unfortunately.
Well, they're going to say it's global warming, you know.
It is global warming as well. It's a combination because conditions that are extreme obviously also, you know,
contribute
and make it a lot easier.
Doesn't strike a match, doesn't throw gasoline on something.
That is true, but you know, it makes things a lot harder afterwards to contain.
Yeah.
So, Steve, since we have an interview starting here in just a minute.
I don't know if we do, Blake.
You don't know if we do.
I'm hunting. I'm hunting right
now. You hunt around. Steve, what are your thoughts this week? What's the main event? There's so many things happening this week. What's the main course for you this week?
I would have to agree with Stelios.
Love you, bro.
Don't forget to send me that money we discussed.
Okay.
Of course.
So you'll be looking at the Fed.
Yeah, because I think not for any other reason, because I think that is what the market is always looking for first. So, you know, we have to go with the market, right? We have to go with market participants.
Right. So you're going to be focused on the Fed. You think there's going to be any shift? I mean, everybody's thinking that 2024 we're going to start to see rate cuts. I think maybe the risk regarding the Fed is going to be that the market has to, you know, starts to look at that dot plot and say, you know, I don't know if we're going to be getting any, you know, rate cuts next year.
Michael, can you raise your hand? You said you're here. I can't find you.
Is that Michael Fowl?
No, I'm not sure if it's Michael Farrell.
Because that someone got their hand up in the participants.
Okay, so okay, we'll make him take a shot with his last name here. All right.
Anyway,
sorry,
yeah, that's him.
That's him.
Okay.
Should be him.
Oh, so you do have an interview.
Yeah, we do. So hey, Ryan, how about you for the week? What are you looking at for the week?
It's all important. We got PMI data today. That's going to be important. We got consumer confidence tomorrow. That's going to be important. Fed, it's all important. We're here to trade it, aren't we? So it's all important.
It's all important. All right. You know, that means Ryan, just like the Fed, just like the ECB, he's data dependent as well. So looks like we're all going to be data dependent this week, and there's going to be a lot of data and a lot of moving parts this week. So, and it's probably one of the last weeks that you're going to have the majority of the market here. So many people in August are going to be out on holiday, which means volatility is just going to increase going into next week. I mentioned this during the week ahead video, and I'm going to mention it right now as well. On Thursday, we approved the most trader funding programs, live accounts went through on Wednesday or Thursday of last week, and we have to approve each and every one. And we had a bunch, and they all came through, which
congratulations.
Yeah, it warms my heart because I know a lot of people were positioned correctly. Obviously, when that happens, and that was the most. It was like instant. You should have seen the emails. It was like, you know, like it was crazy. Yeah, so it was cool. It was really cool.
Yeah, you know, you guys are helping these guys pass their assessment. I think.
Yeah, and then they get to trade our capital, and you know, get to hopefully.
I think we're going to win the Nobel Peace Prize this year.
That's
for humanitarianism.
There we go. Yeah. So I want to say, hey, Dale, thanks
considering
for being here.
the history of people that have won it, seems easy.
Oh, damn. Dale, have a great interview.
Right,
and guys, thanks for being here. Kman, welcome back. It's nice to have you back.
We missed you, bro.
Yeah. Thank you.
All right, guys. I'll pass it over to you, Dale.
All right. Thank you, Blake. Thank you, team. Kind of a difficult week to prep with all this different action. So, Michael, welcome back to F.A.C.E. How are you?
Yeah, I'm doing really well. Thanks for having me. How's your weekend?
hot. How about you?
Yeah, I think that's the narrative across the world right now, right?
Isn't it? Yeah. So hell on earth, what are you doing? What's top of mind? I know, Michael, that you are you going to share your screen at all?
Yeah, happy to at some point here.
Okay. All right. I went through your stream and on Twitter, and it seems like you spend a lot of time mentoring people. And, one of the things I really liked, and, I've talked about it, maybe you could elaborate on it, is to have a two-way relationship with your broker, which means pulling equity out of your trading account to make it real. And that once you started doing that, you took your trading even more seriously, because they're not just chips like you would get in the old days in Vegas, where it didn't seem like money. You're just throwing a chip on the table.
Yeah, I think that's totally spot on. Like, kind of making that relationship more real, or understanding that, hey, this can actually be a consistent source of cash for me, changes how you kind of view the market, right? All of a sudden now it's more, how can I make sure that I'm consistently getting paid? How can I make sure that this gravy train doesn't stop? Versus how can I make sure I have the biggest number in my brokerage statement? So I think once you kind of consistently reinforce that relationship, all of a sudden you almost understand the consequences of those decisions that you're making when you are trading, and being a little bit more cautious, a little bit more patient, a little bit more focused on that sort of risk management side of things only can have positive outcomes for your trading in the long term.
How about taking it one step further and buying something with the cash that you withdrew, so you actually have something physical that you see that came from my trading?
Yeah, so
rather than just, what do you think?
I like to reward myself in a slightly different way. So obviously financial rewards are fantastic, but I think rewarding sometimes a P&L outcome can be a little bit of a way to kind of like chase the dragon, to sort of speak. So I like to reward myself based kind of like on following my rules. So say, for example, if one of my rules for myself is that I want to lose no more than 1% of my account after stop loss, if 90% of my trades that week lost less than that 1%, then I would say that I objectively followed my rules for that context, and I want to reward that decision instead of the P&L. So if that then happens,
interesting. Okay.
That becomes when I, buy myself that nice bottle of wine on a Friday, or I, have that nice dinner, or for me, my addiction is running shoes. So that tends to be how I kind of, reward myself there. And I'm trying to reward myself for obsessing over the process, because I found that when that becomes more bulletproof, then the outcome sort of takes care of itself.
Okay. Very insightful, Michael. And let's get to some insight on Amazon. So, Amazon had its Prime Day, actually gapped up. I think that green candle, you're looking at weekly, but daily, we had a gap. And then we had last week, pretty negative week across the board, especially in mega cap. So are you turning a little more negative here in Amazon?
I think in general, there's a few names that have had a significant amount of selling pressure as we're kind of creeping up towards that special rebalancing. So today after market close, the QQQ index is changing the market weighting of sort of the top 5 names. So it no longer has a 45 or 46%, I think, market index weighting. And so that's now getting changed down to sort of a 38% max weighting. So that's why we're seeing a lot of this sort of high volume selling pressure in the Amazons, in the NVIDIAs, and even some of the Microsofts, as basically a lot of that pressure is now getting priced in as that sort of change is going to happen. I know a lot of the time, or what you talked about here this morning, was sort of that convergence of data, right? How we have tons of earnings, we have FOMC, and sort of now to throw this into the balance, it kind of does make it seem like the path of least resistance is lower, not necessarily higher. And so a natural pullback here seems to be where it is. And it, on these mega cap names, on these leading names where we've seen a ton of kind of sustained kind of climbs higher, we're now starting to see really aggressive volume step into the downside, which makes me think that, hey, it's really challenging for me to want to force price action here or to chase these moves higher. I don't think the risk reward is there in the short term for us to get that immediate follow through.
Okay, so in situations like this, with all this data, are you a stand aside guy or just scalp intraday? What do you do on a week like this with economic indicators, 3 central banks, and big earnings reports? Do you just become a spectator?
To a certain extent, yeah. Like my big belief here, right, is we've got too many data catalysts out there for me to think that I can front run a trend without essentially gambling on that decision. So my objective here is to more wait for that trend to be established and then to find pullbacks or relative pullbacks right within that context to sort of take advantage of. This week, there are some opportunities for me to take advantage of some trades, especially early in the week pre-FOMC, but I'm going to be putting more of my focus towards names that don't necessarily have as much headline pressure. So stuff like AMD and NVIDIA are going to be a little bit closer towards sort of the upper end of my watch list versus taking advantage of maybe like a Microsoft or a Meta that reports tomorrow and Wednesday.
All right,
so
let's go back to AMD.
Yeah.
Okay. So AMD, one of the few semiconductors with a very strong sector that put in a failing rally back at that support level. That to me looks ugly. And to me, just a matter not of if, but when we break down. That actually measures under 90 to me, about 85, which is a huge move. What do you think of this setup technically?
I think you've got a spot on repetition pattern here, right? So it's almost like you had a channel breakdown and then you can have it basically take the stairs down here, right? I think that 90 target would probably be my initial area, maybe even a stop along the way at 100.
That's still 20%.
Yeah, exactly. That's a huge pullback. So, and it would be relatively healthy considering the move it's had, right? Like in October, you could buy AMD at $60, right? Or in that $60 range. So the fact that it's up, almost 100% in 9 months or something along those lines, 20% pullback here is beyond healthy.
Okay. Any other asset classes you pay attention to besides honestly, equities?
Mostly I just focus in the stock world. That's what I've been trading for 10 years now. So it's hard for me to want to learn something else, to be honest.
Besides the mega cap, are you watching things like banks or miners or any other sectors that are coming to the forefront of that there might be opportunities with all this data and central bank activity?
Honestly, not particularly. So for myself as a trader, I'm a big believer, at least for myself, my success has come from kind of almost having like that tunnel focus. So I'm really kind of zoned in on sort of my 8 names that I trade on a day in, day out basis. And I'm looking for the best version of a setup that I can get in all of those sort of securities. And I'm not looking necessarily to bounce around too much between different sort of monthly theses.
I agree with that. Sometimes you look at too much, you lose your focus. How do you trade this stuff? You just either get long, do you short these issues? How do you participate?
So I'm right now when VIX is sub 20, I've had very few reasons to want to be bearish. So I've mostly been looking for dip buy opportunities and kind of price action that supports sort of bullish trending price action. So I've been looking to basically ride that wave as much as possible. In the last 2 or 3 weeks, it has felt a little bit like we've had a shift in market dynamics, where the biggest sort of change to me, or the most sort of obvious structural change to me, was that Fridays went from being sort of a kind of trend day or kind of like a low volume runner day to now kind of becoming a high volume sell-off day. And so I'm a big believer that strength comes in early and it shows up late. And when we see that kind of end of week kind of high intensity selling, it does seem to be a little bit of a dynamic shift, especially when we've had such a contradiction compared to what it was previously. So that's made me a little bit more flexible on looking for trades to the downside. And then I'm essentially looking for overreaction moves. So,
okay. So you had NVIDIA and Microsoft up there. What levels are you looking for in NVIDIA? I think it's an important high here, but you're looking to buy a break, I understand. Oh, that little triangle breakout line, maybe.
So I was playing this breakout higher here, and then that Friday the 14th candle, right? We hadn't really done anything to now tell me that bulls are in control since then. So played a volume divergence reversal basically off of that 475 last week, and then looked to try to fill that gap. Didn't quite get all the way there, but that was essentially the thesis. So we established trending price action there on that Friday, like we mentioned. And then, find weak sellers or weak buyers, right? Kind of reject inside there and then look to run that move lower. Rest of the week here, my bias is to look for sort of high volume rejections inside Friday's candle again, and to kind of see if I can finish filling that gap. And then once that gap fills, you either look for a retest of that trend line for opportunities to go long, or look for this to kind of consolidate for a little bit while it kind of catches its breath after making that move.
Okay, a pretty crowded trade. When you think, I mean, it's really the poster child for the AI explosion, right?
Yeah, absolutely. But that does mean that you just have to make sure that you're actually getting the volume that you're looking for to confirm your thesis, right? If a trade is crowded, then your strength should be pretty obvious to see. And so if you're not seeing like a volume standard that's bigger than what you saw on Friday, or you're not getting a volume standard that's actually convincing that there's strength, then the question to ask yourself is, where is everybody? And maybe this is one to watch versus one to trade. But as long as that volume shelf is there, then I've got no reason to avoid this.
Okay, it looks like it was making after that first huge gap, volume decreased until we had this sell-off here. Do you think that there's potential? What would turn you negative, NVIDIA, and open up your mind to a possible gap fill on this?
Well, I think right now the path of least resistance seems to be towards maybe that 400 zone again, right? And then if it can sort of reestablish some support off of that psychological level, it totally would be reasonable to look for opportunities. I think from a macro perspective, the names that, maybe blew up the most, and if we start to see a bit of a market turn, this is going to be the name that falls the fastest, I would imagine, right? When we see these kind of bumps, when you saw like weed stocks get legal or gambling stocks get legal, you always kind of have that initial mania that pushes price action higher. And then we get a pretty significant pull down that sort of reestablishes a realistic expectation, or once kind of those news narratives get priced in. So I don't think we've had that happen yet on NVIDIA. And the risk reward, at these all-time highs, probably an easier path lower than it is higher. Like it seems like most of the move has probably already happened at this point if you're going to be trying to price in that optimism.
Okay, let's move to Microsoft. They have earnings this week. How would you play earnings on Microsoft?
Yeah, so for me, this continues to look like it's basically just hanging out. We can call this like a channel here, right? So inside middle of this channel, I'm not really being told there's a very strong indication of either direction. And then if I do get a kind of good earnings catalyst, I'd be looking for a trend line breakdown. I think the path of least resistance would be under this like 327 area, right? We've got a bunch of support here of this basically being zone where we've seen dip buyers step in before. So if I can now invalidate that price action, lose that level on some volume, that would give me a lot of confidence that I could kind of start targeting the next points of contact on this trend line. So maybe that 305, that 300, and then like that 290 zone would be sort of a nice move. I think higher, right? Generally chasing breakouts from like broadening formations. They never feel like they're the strongest moves for me. So yeah. I think the path of least resistance continues to be maybe potentially a little bit lower here. And there's a lot of opportunities to basically bolster to step in at each point of contact. And so I'd want to just basically ride it down towards that path.
Okay, got it. Anything else you want to cover stock-wise?
Honestly, I think this week, there's so much data that's coming out that the updates, right, or what you're going to know what the trend is going to happen on Wednesday afternoon and Thursday morning. That's going to be sort of the potential catalyst for this next move. And until then, for me, it's going to be more about managing my risk, managing my expectations, and trying to put myself in situations where I'm just not shooting myself in the foot. When I can just focus on the variables that I can control, then everything else will kind of take care of itself. And it's really, I don't want to say egotistical, but a little bit aggressive for me to think that I can front run this trend or that I know better when there's so much information that can invalidate my ideas. And it doesn't really seem like this is a market that's rewarding sort of that rush decision making. So there'll be a time to press and there'll be a time to kind of let off the gas. And I think Monday, Tuesday, Wednesday is going to be a little bit of a time to let off the gas a bit.
Okay. One of our attendees, Martin, is asking if you have a view on Alphabet.
Yeah, on Google. Yeah, absolutely. So we can bring that up here. Again, right, earnings this week, tomorrow. So with all these big moves kind of happening already, or a big kind of climb since even the last earnings, the risk reward doesn't seem like the next move is necessarily towards that 150 or 140 area. So I think you need a pretty impressive catalyst, a pretty impressive earnings breakout to actually think that you have a lot of room higher. I think the most realistic, I still think the most realistic path is lower on most of these names. And that's going to be sort of, I think, how things start to get priced in. So my expectation would be look for a pullback back down towards like the 100 area for sort of a reentry to go long, or maybe even that 110 zone. That could be sort of your risk reward buffer for a move back up towards sort of 130.
Okay. Do you differentiate if you go back in time a little bit to, like you were showing before on this, just take it back to the highs in 2021? Okay. All right. So that stocks with, a lot of stocks, Apple's made new highs, Microsoft's made new highs. What's interesting about Google is it looks like just a retrace move. And the same was with AMD, that they weren't making new highs, but just retraced the decline of 2022. Do you look at that as being a bearish factor when the rest of the market, many issues have made new all-time highs?
Yeah, I think in general, the lack of market breadth has been a little bit of a concerning point of this rally. And
well, they're saying it's broadening out though, right?
Yeah, certainly, but maybe a little bit too late for that to happen, right? If we're now going to
rotation isn't necessarily bullish, is it, Michael?
Exactly, right. It can be a little bit of a distraction sometimes. But I think we have seen to a certain extent is that maybe 5 or 6 names have kind of behaved like safe havens inside the equity space.
Yeah,
right?
Isn't that something? Apple's a bond now.
Exactly, and it's been very. Markets have not behaved the same way that you'd expect in an interest rate rising environment, right? And although we've had some inflation certainly should make stocks, kind of rise in price. We haven't seen that necessarily be a very equal calculation across the board. And so as some of those safe havens now maybe start to see some withdrawals, I would be skeptical to think that a lot of these names that are now making sort of weaker, higher highs are going to consistently give me a pretty impressive kind of next leg higher. So again, I'm really struggling right now to see how the risk reward on these moves is, to start making new all-time highs on these Googles or to make new all-time highs on an Amazon. It doesn't necessarily feel like that's the easiest path forward to me. And so I just want to be a little bit cautious until I get some new information that maybe either creates more optimism or confirms my, I'm going to say, bias to be skeptical.
Anyway, just a classic lesson is sell relative weakness, and any stocks that after this, I was not looking for 4,600 a couple of months ago. 4,340 was kind of a target I was looking for in S&Ps. But all these stocks that have performed normally, okay, not abnormally, but just corrected their 2022 weakness, are your best short candidates. Even though there's more air left in things like NVIDIA and maybe Apple. Apple's made a new all-time high. So it's interesting bifurcated or trifurcated or quad market. But it does look like, and I don't know if it's, do you think it could just be the rebalancing, Michael, that's putting pressure on these stocks? It almost seems too easy.
It's definitely going to be forcing so much volume out there, right? The amount of funds that track the indexes on a dollar for dollar basis or near dollar for dollar basis is incredible. So just from a pure operational perspective, it's so obvious, but the volume is too. So you can almost not ignore it. Sometimes the most obvious answer is the simplest one, but I think in general, this week we've got 3 things, we'll call it essentially, right, all in one. So it's impossible, I think, to put 100% credit to just one element. I think there's the expectation that the Fed's going to hike again, the expectation that maybe earnings aren't going to be as hot or they haven't been as impressive like we wanted to see here so far. And then this extra selling pressure, it could almost be like the straw that kind of breaks the camel's back.
So again, Michael, what's your business model? Do you have chat rooms? You teach, you mentor? If you want to show your website now, it'd be a good time.
Yeah.
And
so
go ahead.
Best way to contact me is through Twitter or my email, michael@dtrtrading.com. What I do is I work with 5 or 6 traders at a time and basically help them level up their trading in a very kind of intense one-on-one coaching capacity. So we'll be going over your trading on a daily basis. We'll be talking about individual pain points that you can fix. And my objective is to help traders get funded with the prop model so that they can then scale that proof of concept. So if that's something you're interested in doing, regardless of what asset class you trade, pretty confident with my institutional experience that can sort of help you get there. And it's really just about focusing on systemizing your trading so that, P&L growth and account growth is a formula, not a feeling. And then that becomes a more sort of sustainable path of trading when you kind of, have that formula in your back pocket.
Okay, well, there are many different prop trading opportunities for people. Have you taken a look at ours?
Yeah, absolutely. You guys offer a pretty fantastic product, but not the same coverage of the names that I traded on a day-to-day basis. So I unfortunately went a different path.
Okay, so you actually work for a prop firm and you trade people for them?
Yeah, I do, correct.
Okay, all right. Well, you never know. So you're saying it's because of the instruments, because they're more stock centered, because I do believe people could trade equities in our program.
Oh, very interesting.
CFDs.
Yeah, that might be very interesting.
They could trade everything.
Yeah.
And I think we have one of the better programs that do not put time pressure on people to accomplish it in a certain period of time.
I mean, I think the most important, like, time has got nothing to do with your ability to find an A+ setup. The market does not care how long it's been.
So then why do these prop companies put time limits on? Because they know it's going to create emotional responses to try and get it done in time instead of letting the market come to you.
Yeah, I think there's two different, like, kind of, we'll call it business models out there, right? Like yourselves, where you're kind of more trader centric focused, where it's about how can you set up our structures or our systems so that traders are actually, rewarded for their decision making process, right? That means no time limits. That means reasonable kind of drawdowns. And then there's going to be other kind of prop firms that just make their money off their evaluation fees. So my objective obviously is not to work with those sort of companies. I only work with companies much like yourself that have that sort of very generous sort of daily drawdown or sort of drawdown ability, and then no time limits either, and simply just one stage evaluations, because there's no point to overcomplicate things. It's got to prove that you can manage risk, and then easy to go from there.
So there you go. You heard from Michael's mouth. There are a lot of scams out there. I call them scams.
100%.
When it's very slanted towards the house and not towards you. And you heard it from a guy who does it full time.
There's many
program here.
There's many rooms, right, or many prop firms where the average payout is 1%, right? And so if 1% of traders get paid out, and you're charging $250, whatever, for an evaluation, you have a casino that cannot lose. And those business models are very predatory towards traders. So just be careful. Make sure that you pick the service that's best for you.
Okay, Michael. So you can follow Michael at DTR_trading.
Yeah, correct.
If you just go DTR trading, you won't get them. So DTR_trading. Thank you, Michael, for being here and for your view on what we do here at ForexAnalytix to give people a chance to accomplish and possibly have a trading career. Appreciate it, buddy.
Appreciate it. I'll look into your program. Sounds fantastic.
All right. Thank you, my trading warrior brother.
All right. Talk soon.
All right. Okay, everyone. That's a wrap for me. Join the team in 17 minutes on the Morning Edge. And I'll see you guys tomorrow for Turnaround Tuesday. People are thanking you, Michael. I'll get a hold of you on Twitter and we'll talk about getting back together in the fall. So remember, everyone, don't just count your pips, count your blessings. See everyone tomorrow. You're very welcome. Chandra.